Welcome back. Today we're doing a deep dive on commodities, gold, oil, and the metals, with the key levels and scenarios. Let's dive into gold, which is currently trading at around 4,187.3, showing a recent increase of 1.81. Now, gold has long been viewed as a safe haven asset, and in today's economic climate, it's no surprise that many investors are turning to it. The driving forces behind gold's price movements typically include inflation concerns and global geopolitical uncertainty. With inflation remaining a persistent worry for many economies, investors might flock to gold as a hedge, pushing prices higher. Looking at potential scenarios, if gold can break past certain resistance levels, we could see a rally towards higher targets. Conversely, if there is a significant shift in economic indicators or a resolution of geopolitical tensions, we might witness a pullback. It's important to watch the broader economic news as it directly influences investor sentiment in the gold market. Now, let's turn our attention to oil, where we have crude oil priced at 68.78 and Brent at 72.13, both experiencing slight upward changes of 0.13 and 0.46 respectively. The oil market is heavily influenced by the balance of supply and demand, and right now, we're in a scenario where OPEC's production cuts and geopolitical tensions could tighten supply. On the demand side, recovering economies are pushing consumption higher, but uncertainties, such as potential recessions, can dampen that demand. Key levels to watch include 70 for crude and 75 for Brent. If these levels are breached, it could lead to increased volatility. However, if demand falters, we might see prices retreat again. Keeping an eye on inventory reports and global economic indicators will be crucial. Moving on to silver, copper, and natural gas, we see silver trading at 62.81, with a notable increase of 3.58, copper at 6.22, up by 1.79, and natural gas at 3.24, rising by 1.53. Silver, often seen as a little brother to gold, typically moves in tandem with it, so its rise could indicate heightened interest in precious metals amid economic uncertainty. Copper, on the other hand, is a key indicator of industrial health. Its price reflects demand in construction and manufacturing sectors, so a rise here could suggest a robust industrial outlook. Natural gas is interesting, as it reacts strongly to seasonal demand and energy policy shifts. The mixed signals from these commodities can provide insight into broader economic sentiment, indicating where investors might be placing their bets. Let's discuss some key levels and targets for these commodities, which can provide educational scenarios for traders and investors. For gold, a crucial resistance level to watch is above 4,200, while support is expected near 4,100. For crude oil, keep an eye on a resistance level around 70, with support potentially forming at 65. In the case of silver, the resistance is hovering near 65, while support could be around 60. These levels can serve as a guide for potential entry and exit points in your trading strategy. Remember that these are hypothetical scenarios and should be supported by additional market analysis and news. Finally, let's wrap up with the bottom line on what these commodities might be signaling for the stock market. Commodities often serve as leading indicators for market trends. If we see sustained strength in gold and oil, it could suggest that investors are cautious, potentially impacting stock valuations. However, if industrial metals like copper show strength, it might indicate optimism in economic recovery, which could bode well for equities. The main risk here lies in the potential for an economic slowdown, which could adversely affect both commodities and stocks. It's essential to keep an eye on global events and economic data that could influence commodity prices, as they may offer insights into the direction of the broader market. If this helped, smash that like button and subscribe so you never miss a breakdown. Drop your thoughts in the comments. What are you watching, and what should I cover next? This is for education purposes only, not financial advice. Trade safe. And if this video helped you in any way, please hit the like button and subscribe to the channel. It really motivates us to keep making these for you. And join my free Telegram channel for daily alerts with exact entry and exit prices. The link is in the description.